going forward. Now, all of this could be handled with the search tool as well as some other features. And I want to discuss just a couple of different ways you can set up the search tool to match what you're looking for. One of the first questions I always get from experienced options traders or investors who've been trading options for a couple years, when they see the basic default radioactive search, they'll ask me, why aren't you using anything for implied volatility? Why aren't you using anything for the delta, for example? Well, essentially, that's already factored in. Not directly, of course, but if I'm looking for positions that have a risk between 2.5%, and I'm actually going to make an adjustment here because my personal threshold is only to look for a position to have less than 7% at risk. If my delta was too low, let's say it was 0.5, 0.4, for example, it wouldn't be in the money, of course, that would be out of the money, negative 0.5 or negative 0.4. My risk wouldn't necessarily match in this range. Most of the time, if I'm looking at an at-the-money put option that would have a delta around negative 0.5, negative 5.5, my risk might be around the range of 9 or 10%. It's already filtered out to begin with. The range I'm looking for, I expect to see deltas, the risk of 2.5 to 7%. I expect to see deltas roughly between negative 0.6 to negative 0.8, negative 0.85. Volatility, why am I not using a screen for implied volatility? Well, if the implied volatility was too high, it would naturally be filtered out of this to begin with. And if my implied volatility was too low, it would be in this lower spectrum anyway. It would have a risk of around maybe 2, 2.5%, maybe 1%, 1.5%, something along the lines of maybe IBM, which only has its implied volatility of around 0.2 or 0.15 on a regular basis. So those are already taken into account by the risk factor. If the implied volatility was too high, it'd be out of bounds, it'd be up to about 10%. If the implied volatility was too low, when the stock doesn't tend to move, the risks would be extremely low, probably less than 2.5%. One of the other common questions I get, and many of you who are looking at the screen were probably tempted to ask a question, especially on that American Tower view, is that, well, would you ever actually trade a position that had zero open interest? Personally, no, I wouldn't. I usually like to see an open interest of around 15 to 20 contracts if I'm only going to, I'm trading around 500 shares or 5 put contracts. So, of course, to filter that out, just go into the field here. Again, on the left-hand side, there's my open interest range. I'll put in a minimum of 15. You might consider that too low as well. And so you have a minimum open interest requirement of 50 contracts or 100 contracts. You would just put that into the field, and then we just click Submit these settings again. Step by step, you're going to filter it down based on what you prefer to see. Okay? Now we've limited it to only 26 results. Most of it is just due to that open interest, and that's fine. We have to expect that not a lot of positions are being traded that are 150, 190, 200 days out in time and deep in the money. So this will help you get some better listings that match your personal criteria. And don't get me wrong, just because I don't use implied volatility and I don't use delta, it doesn't mean you can't. Those are two specific features or two specific criteria that you always use when you're analyzing a married put position or any position. You could just put in your ranges for delta or put in your desired range for implied volatility. Now, on the right-hand side where you can track most of your stock information, we have just basic criteria set now, $9 to $65 per share. Average stock volume greater than 300,000. This is measured in thousands. And we're using the IBD 100 and canceling list. We don't have to use the IBD 100 and canceling list. If you want us to look across the entire universe of options, and one of the styles that I'll trade radioactively is look for larger volume stock, almost blue chip stocks, that pay at least a 3 or 4% dividend. There aren't a lot of IBD stocks that pay that high of a dividend, but there are a lot of stocks out there that do. If this was my goal of what I was looking for in some of my positions, to use a dividend paying feature, what I might do is simply change down at the bottom in the recommended list section where I have IBD 100 and CanSlim. I might change that to no lists. So I'm scanning across the entire universe of options now, or optionable stocks. I'm going to leave the simple moving average to look for stocks that are trading in an uptrend. I'll change my average stock volume. Rather than look for stocks that trade at least 300,000 shares on average per day, I'm going to increase that up to 750,000. If you only wanted to look for stocks that traded at least 1 million shares per day, we would just change that to 1,000. All right. If I wanted to use market cap, I wanted to look for mid-cap stocks or larger. I might just use a market cap of greater than 2,000, or I could look for large cap greater than 10,000, for example. What do I want to look for now? I want to look for stocks that pay at least a 3% dividend. So in the percent dividend yield, I'll go ahead and put in 3 to blank, anything with a 3% dividend to blank. I'm not going to change the month time frame because that's what we look for when we're trading radioactively. I'm going to leave in this range in the money because I don't want to go deeper than 20% in the money. And I'm going to leave my risk range of 2.5 to 7%. One of the advantages, one of the reasons why Kurt likes to use that IBD 100 and canceling list as a default is for the Investor's Business Daily already has gone through and looked for stocks that have certain earnings, have certain values, that look for bullish trends. Well, I removed that list, so what I'm probably going to want to do now is put in some fundamental or some other technical criterias that I feel match a bullish stock that I would look for. So I might look for stocks that have an earnings per share growth of, let's say, at least 5%. They've grown in earnings at least 5% from last year to this year. I might look for a PE ratio of, let's say, 0 to 70. It's a basic screen. I talk to customers who like to use a PE range more restricted of 0 to 40 or 0 to 50. I could use the broker rec, for example. This is based on the ZAC scale, where 1 is a strong buy, 2 is a buy recommendation, 3 is a hold, 4 is a sell, and 5 is a strong sell. So if I'm looking for higher recommended stocks, I might look for positions or broker recommendations of less than 2.8. Anything that's sort of between a hold and a buy recommendation, or a strong buy recommendation as well. If I wanted to use things such as the RSI or the Bollinger Band ranges, I could put those in as well for the technical criteria. But let's just use these examples. Looking for some bullish stocks, some good fundamentals, still in an uptrend, medium to large cap stocks that trade at least 1 million shares per day and have a 3% dividend. Now let's run that search. We're probably going to see some familiar stocks here, what we might refer to as water cooler stocks, I sometimes refer to, or dinner table stocks. Philip Morris, Kraft, many of you know this is a position that I'm in, that I opened in December. I'm actually bulletproof on this position since February, still collecting a dividend and doing other income methods. ConocoPhillips, Abbott Labs, Home Depot, Coca-Cola, Bristol Myers, which I have traded before, Altria, and so forth. There's only 41 results that match this criteria. Now again, Philip Morris is at the top of the list because I'm still sorting by the maximum risk from lowest to highest. We have roughly a 2.8% at risk, and we're 17.9% in the money. What would we do now? We'd follow the same steps. Okay, first step, take a look at that stock chart. Does it match the trend? Are you comfortable with the position? And analyze if you feel strong that it's going to move up in price. If you're not familiar with Philip Morris, we'd want to look at that company information. We're going to take a look at the profile, take a look at recent news headlines, and maybe review some of the last earnings and events. We could go to the search by symbol tool again. Here we're showing we could buy Philip Morris at $53. That 62.5 strike put, of course, is 17% in the money. So maybe we'd want to compare it. We do see other positions here. Here's the first Philip Morris position with that 2.8% at risk. Further down,